Welcome to Market Recap Live. I am your host, Joseph Martin, and thank God it's Friday, guys. It is Friday. I hope you had an awesome day. I'm here as close as on time as I'm gonna possibly get. I needed to clean my glasses, so I wouldn't have started on time. I wouldn't have started on time if I had waited to clean my glasses first before I started this live stream, but I didn't want to be sitting up here trying to talk about these stocks and look at these things with dirty glasses on. So please bear with me. And while I'm doing this and getting myself situated, I hope this helped. That's what we gonna do. That's where we at. So let me get the rest of this stuff set up and going. Go. Can you hear me? Can you hear me? Yes. All right. Let's start talking about what we're going to do tonight. What happened? Keyboard acting up. Oh my gosh. All right. Let's get it going. Tonight, we are taking a look at ticker PG. You might know them better as Procter Gamble. The Procter Gamble Company was founded in 1837 by William Procter and James Gamble, with the first office opening in Cincinnati, Ohio. Now, they're a publicly traded. Oh my gosh, wait a minute. Now they're publicly traded on the New York Stock Exchange and have a market value over $300 billion. Procter & Gamble is, wait a minute, guys. Procter & Gamble is in the household product industry in the consumer staple sector, and they are listed in the S&P 500 index. Some of the Procter & Gamble Company's competitors are Colgate-Palmolive, ticker CL, Kimberly-Clark, ticker KMB, and Clorox, ticker CLX. We're going to review the Procter & Gamble Company's earnings, their website, and visit the charts to perform a quick technical analysis. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube and Facebook. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, and put an FB in the chat if you're tuning in from Facebook. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Exchange calendar down in the description. Okay, let's get to it. Let's get to these earnings. Okay, there we go. That was smooth. Tonight. All right. The Procter & Gamble Company, ticker symbol PG, the $344 billion company, reported its third quarter earnings today. And they have a 52-week high of $170.99, which took place on May 30th, and a 52-week low of $137.62 that occurred January 7th, which is a trading range of $33.37. And they closed today at $148.18. The Procter & Gamble Company earnings report missed on the top line, reporting revenue of $21.24 billion, which was lower than the market expectations of $21.52 billion. But they beat on the bottom line as organic sales growth and strong productivity savings offset unfavorable mix and margin pressures. EPS was higher than the analysts and market expectations of $1.56 when they reported an adjusted EPS of $1.59. The Procter & Gamble Company reported a GAAP net income of $4 billion, which was higher than the $3.8 billion net income they reported the same quarter last year. This represents an increase of 5.3%. So for the third fiscal quarter of 2025, their net profit was approximately 5% lower than it is compared to now a year later. The earnings were released before the market opened, followed by an 8:30 a.m. Eastern Time conference call. As far as guidance, management maintained their full-year sales and EPS growth outlook, but warned investors that earnings will likely fall toward the lower end of the ranges due to commodity and tariff headwinds. That 52-week low compared to today's closing of $148.18 represents an increase of 7.7% over a span of approximately 3 months. So if someone invested $1,000 in January at that 52-week low of $137.62, they would be seeing a gain of $76.73. Okay, we got through it. Now, let's talk about why we visit these company websites. We're looking at the visuals and the text to find answers to these key questions. What goods and or services does the company sell? How important are those goods and services to their customers? What makes this company stand out from the competition? And how well do they take care of their employees? To find those answers, we browse 4 key areas: the homepage for goods and or services, about us for purpose, vision, and mission statements, careers for employee benefits and opportunities, and investor relations for SEC filings and stock quotes. And for your convenience, all companies featured in tonight's live stream are down in the description. Now let's go back to the Procter & Gamble's company's website. Let's go back to their website. Let's blow this up. And I'm gonna bring you over. Here we go. And we can take this off the screen. We don't need this disclaimer right now. And that's not the ticker. That's not the ticker. Let's get the ticker we need, guys. There we go. Procter & Gamble. Here we are. Let's zoom in. 150. Here we go. So when I started getting into investing, guys, I started realizing that almost everything you could think of when you go to the store is basically owned by the same company. And you'll see that the more you watch these live streams. So as we look over the brands for Procter & Gamble, it's right here at the top of the screen. Let's go to brands, and we're going to look at what their brands are. I'm waiting on it to load. Okay. Look at all these different brands. So let's say you was like, I hate Loves. You was like, I'm gonna start using Pampers. That's the same company. That's the same company. Look at all these different brands. The whole cleaning aisle. Look at this. Procter & Gamble. And you probably never noticed it because it's on the back. It's on the back of their products in very small, fine print on the back. You'll see P&G on it. Look at this. Old Spice, Pantene, Dawn. Look at this. All of this. Febreze. All of this is Procter & Gamble. So if someone was to invest in this company, they would be involved with benefits from or profits and losses from all of these individual companies that they own. They're different brands. I wonder if they're showing everything, because it's not even, you can break it down into different categories over here, but I'm just going to scroll and see. Metamucil, I didn't know that was Procter & Gamble. Vicks, look at this stuff. Wow. Okay. So we know what their goods and services are. This is basically like personal hygiene, household products, and things like that. That's their brand. So that's their goods that they sell. So let's find out about the company, like the mission statement and all of that stuff we talked about at the beginning. So who we are, make it every day more than ordinary. Remember, the links for these websites are down in the description for your convenience. I'm looking to see, so they talk about the purpose, their values, and their principles in this section right here. And employees talking about their stories. They talk about careers, heritage, leadership. Learn about our latest efforts. I am looking for something that specifically says mission statement or something like that at the title. We have to dig around on some of these websites. So our impact. Nope. Our story, who we are. So I wonder if this is on the same. Let's go ahead and go to the careers. They might have the mission statement and purpose and vision and stuff over there. I don't see that at the bottom of this page. So let's go back to the home page. How do we go back to the home page? Is it this? Yes. So that took us back to the home page. Let's go down to the bottom. Okay. So it's going to open up a whole nother website if we were to go to investors. I don't see a section. Here it is. I'm blocking it. You can't see it. So careers is right here. And usually when they have a logo like this, a little emblem, it opens up a whole nother web page on a different website, which it did in a whole nother window. So give me a second to bring it over so you can see it. Blow this back up so I won't run into problems. All right. So here is the career website. And I am looking for the benefits, the mission statement, the vision statement, things like that. So here's about us. Let's zoom in and zoom this out. Slow this down. Zoom in. Okay, culture. Here's benefits right in our face. Thank gosh. Let me put me back on the screen. Benefits. Didn't make us dig too deep for it. So I'm going to come back. I'm looking for the vision. I don't see it. So let's just go ahead and click on benefits. Financial well-being, mental well-being. So we know, so this is the CEO. I scroll past something. Benefits. Where's the list of the benefits? Oh, they're all in learn more. So we would have to click on whatever one we're interested in. Remember, the links for the website are down in the description for your convenience. So let's click on financial well-being. Okay, here's another one of those websites where they just scroll you down on the same page. So we might as well just scroll down. I like this. So they have something about financial education. So they offer financial education resources to help employees achieve long-term financial success. That's dope. That's dope. And believe it or not, a lot of these companies, you might be working for a company right now and your company offers a whole bunch of stuff you don't know nothing about. Go on their website and go look at these areas that we navigate on these live streams. You'll be surprised. So everything that it was showing at the top, we just scrolled down and I was breaking it down into actual sections. And here they are talking about accident insurance. So I have a whole series that I'm working on. I got like 3 or 4 more videos I need to do, but I have 5 videos right now on whole life insurance and life insurance. It's a series. The link is down in the description for your convenience. Check that out. It's very informative. So they talk about, what is this? What is this? Flexible work schedules. You can work from home. Parental leave. Education support. I wonder if they do tuition reimbursement, things like that. Well, you can definitely ask and read. About us and culture. Okay, I'm ready to go to the investors relations. I don't see it right here. I see benefits. I wonder where that's going to take us. We just clicked on benefits. Is it going to take us back to the same page? That's interesting. They got it. It just took us back to the same doggone page. All right. Where's the investors relations? Go down to the bottom. Okay. They talk about the hiring process. So that's good. You'll know what you have to do and what you're going to go through before you apply. We're going to have to go back to the home page because I know I seen it over there. Oh, that's right. We're on a whole different website. Let me close this out. We need to go over here. PG. We were right there. It was at the bottom. Here it is. Investors. So now it's going to open up a whole nother website again. Let me bring it over. So here's the investors page. Let me blow this up. Boom. Boom, and then zoom in just in case you can't see it. And here's the stock information. So they trade on the New York Stock Exchange, ticker PG, and here's the stock price for today and the change, et cetera, et cetera. They talk about who we are right here. I'm scrolling down to see what they have on this page. Okay, quick links right down here at the bottom. Here's the stock quote. And this company does pay dividends. So let's click on stock quote. Here's the stock quote information. Here's the chart that they offer on their website. And here's another investing tool. And then if you click this, it takes you to dividend history. All right, so we navigated their website. Now let's go over to Think or Swim. have the chart, but we need to go here. We need to go here. I forgot. We need to do this. So before we look at the charts, remember, professionals trade from a computer, not a mobile device. Mobile trading apps are unlimited. Traders lose critical detail and advanced platform features on a mobile screen. So be advised, trading from a phone is usually the least effective way for managing assets. To see every detail, use a full trading platform and watch these streams on a computer or TV. Only use your phone as a last resort. Now let's look at the charts for PG. I said that like it was just gone. The timing wasn't right, but we good. We over here now. So here's PG on the charts, and we're gonna do a quick technical analysis on this company. We are looking at a 1 year daily chart. You can see that right here, 1Y, 1D. That's 1 year daily chart. So each one of these candles represent 1 day. So if I was going to do a quick technical analysis, I would put a support zone right here. And I would extend it over here to the right. So that would be my support zone. So if the price would come back down to that area, this is where I would look for it to find support. But it looks like the last time it approached it, it found support in this area. So I'm going to draw another zone right here. So that's an area of support that it's had recently, right here, that it caught right here. And we could actually make this zone wider. We can make this zone wider, and I'll explain why once I do it. More of these recent candles stay on the top of that zone if I make it wider. So if I make it wider, you can see a lot more of these candles actually touch the top of that zone versus me just having it where this one candle touched it. So this one candle dipped down in it, touched the bottom of it, and then all of these other candles use this zone as support. So that's why I decided to do that. This area was a downtrend, so it just was trending down for a while. So I'm gonna use a regression tool or a channel tool so you can see what I'm talking about. I would say, yeah. And then I'm gonna bring it down here. Let me try this one more time. So here we go. We're just making a channel so you can see, put those lines there so you can see what I'm saying. This is the downtrend. So the price was trading within this channel or around this channel, coming down for a while. And that high of $170.99 was in May 2025. May 30th, 2025. And it was downtrending. The price was downtrending until it hit this low this year, January 7th. And then it spiked up from there. It just ran up real quick. And this was, how long did this take? So I'm gonna use this tool, connect to the bottom of that candle and the top of this the highest candle out of this run. And then when I mouse over it, it'll tell us how many days that was. So in a course of 52 days, that stock, PG, went up 21%. So that's less than 2 months. It went up 21.53% from that low to that high. And then it dropped and it found support down here in this area. And it looks like if we're looking for resistance, I would say resistance would be here. I'm gonna use a line this time because I really feel like we already spent too much time on this. So I'm using a line. I think that'll suffice. So this would be resistance because the price is below it. Let me zoom in. So this is the 200-day simple moving average, and this dashed green line is the 9-day simple moving average. The price crossed, it actually opened up above this 200-day simple moving average today, but then it started trading down today and it closed below it. So that's where we are with P&G with the technical analysis. Now let's get the stock quote for P&G by using the floating data box. So PG opened today at $152.01. They had a high of $152.42. They had a low of $147.62, and they closed today at $148.18. And they had a trading range of $4.80. When we look at the trading volume, they traded 13 million shares of this stock today. And remember, they had earnings, and usually there's increased volume around earnings. So when I take me off the screen, we're going to go over here and look at what the average volume is for PG. So this label right here tells us the average volume. So in a normal trading session, on average, they trade 9 million shares in a session, roughly 9 million. And today they sold 13, almost 14 if we do the 13.7 and round up. So they definitely sold more shares today than they do on average. And then they had increasing volume because yesterday, the previous volume for Thursday was 11.2 million. So the volume is increasing and it's above average. But today it was more selling pressure than buying pressure. So the stock went down. And remember, I have a treat for you guys when we get to the winner for today. So definitely stick around. This is going to, what happened today is going to help explain or prove or support what I have been saying about just because a stock goes down when a company has earnings doesn't necessarily mean the earnings was bad. If it was good, sometimes stocks go down. If it was bad, sometimes they go up. It's like people need a story. As long as that story is in line with the price direction, that's all people need. They'll believe anything. So if the stock goes up, the story needs to be positive. If the stock goes down, the story needs to be negative. As long as the story is in line with the price direction, people will believe it. Because there's so many different variables that go on in the market. You can't really prove that that was the reason it went down or not anyway. All you know is that it went down. So the way this stock went down today, it was more selling pressure today, which caused it to go down. That's what I'm seeing. So we talked about the volume, but we didn't talk about the volume rank percentile. So this label right here, it was in the volume rank percentile of 92.1%. And what this means, out of the most recent 252 trading days, only 20 days had more volume than today. That's what that means. So that is better than just looking at, it gives you more information than just looking at the average. Like this breaks down how many days are above the other days that's going on. I'm gonna break this down better in a different video. But this gives us a greater perspective than just looking at average. The average number. There's different ways to look at what's going on. All right, so we can move on. Let's go here. And let's talk about it. So back to the community. I would appreciate it very much if you guys would share the stream, hit the like button, subscribe. And if you wish to send a monetary gift to support the content, Cash App and PayPal links are down in the description, as well as the tickers on the screen. If you're here, hit that like button. I would definitely and much appreciate it. All right. So let's go on and look at the S&P 500 index to see what they did today by using the SPY ETF. This ETF gives investors an opportunity to participate in the broader U.S. market by allowing them to own a percentage of each company in the S&P 500 index. All right. So let's go over and look at the SPY. And we can put that on the screen because we're not looking at PG anymore. So I go up here in the symbol box and I type in SPY. And just in case you wanted to know what the S&P 500 ticker was, it's SPX. So here's the index. And it's $7,168.59. Okay. But this is a metric. You can't actually buy the index. So if I right click on the screen and go to buy, you see it's not highlighted. I can't select it. This is why you have to use, or someone we need to use, the SPY, the ETF, SPY. So now if I right click, you can see that I can select buy or sell. And then this ETF is a 10th, or supposed to be a 10th of the price of what the actual index price is showing you. That's why this is 714 versus 7,000. This is a tenth of that value. So I hope that gives you some perspective of what's going on with that. Now, today we are looking at a 1-year daily chart. We haven't changed the time frame. We just changed what we're looking at. The SPY has closed today above that resistance we just drew on the chart this week. So now this resistance area, that zone, let me zoom in some more. This zone right here has officially become support today, because today's candle closed above this support. It was resistance, but now it's support. This support zone, it closed above it. So let me explain this just in case it sounds like I'm talking crazy. If the price is below a zone, then it's resistance, because it's a ceiling if it's below it. If it's above it, it's a floor. So that's why it's support. So if it closed above resistance, that resistance becomes support. So that's what happened. And today, this ETF closed at $714.47, which was a new 52-week high for this ETF. I really don't see any more technicals because this is a new all-time high. So the sky is the limit again when it comes to the technicals. So let's zoom in and let's do the ETF quote. Let's cut back on the floating data box and mouse over it. So the SPY ETF opened at $710.75. They had a high of $714.47, which is a new 52-week high. They had a low of $709.01. They closed today at $713.94, which was a trading range of $5.46. And when we look at the trading volume, here's another one, guys. The volume is extremely low. And I'm going to show you how we know this low. If you read ahead of me and you know what those labels are, then you know what I'm talking about. But the trading volume for the SPY was 45 million shares of this ETF was traded today. So let me take me off the screen and we're going to go over here to the labels, and I'm going to take this floating data box off. This drives me crazy. We're not using it to read the quotes. So right here, the average trading volume for the SPY is 76 million shares in a trading session. And today they only traded 45. So even though it's making all-time highs and it's up here in this area, the trading volume is decreasing. So like even Thursday they had more volume than today. So Thursday it was 56 million, and then today it was 45 million. And both of those are below average. So now when we go over to our volume rank percentile, now we can figure out how low is it? Like how far below average is it compared to the other days? Well, it's in the 4% volume percentile, which means out of the most recent 252 trading days, only 10 days had volume that was lower than today. So DB means days below and DA means days above. So 242 days had higher volume than today. That's how we would read those labels. So that is the information for the SPY. We are on a roll today. Let's go back to the main screen. We can take the SPY off. Let me put this information for this Facebook page back up real quick and talk about this. So I have an official page on Facebook. So I threw this on the screen earlier, but I didn't talk about it. I need 100 followers, guys. If you can help me out, I'm gonna just say please. Please, I'll greatly appreciate it, because if I reach that number, which I know I will, but I want to reach it fast. We need to reach this goal. 100 followers on Facebook, I can start my live streams on this official page. I need to reach that goal to meet the criteria to be able to get that. So go over to I Am Original Greatness on Facebook and follow that page. I greatly would appreciate it. So let's put that. I'm gonna leave that on the screen for right now. Now let's look at today's winners and losers. First, we're gonna look at the losers so we can end the night on a high note. All right. So let's go over to the charts. Here we go. Go back over here. We still have the SPY pulled up, but I'm going to take that ticker off the screen. So we're going to go right over here to Market Watch. And we have the S&P 500 index watch list pulled up. And the biggest loser for today is CHTR. Let's put them on the screen. Charter Communications Incorporated is the biggest loser for today, guys, and they lost 25.5%. Ooh wee. So the previous close, which was the close they had on Thursday, was $241.78. And today they closed at $180.13. So let's pull up our calculator and let's use a moderate number. Let's say if somebody invested $150. If somebody invested $150 and they lost that 25.5%, we will multiply this times 25.5 and hit the percentage. It's going to turn it into a decimal by moving it 2 places over to the left. We hit enter. That's how much money, or equal, that's how much money they would have lost of that $150 investment. So we negate this, add the $150 back to it, and it'll tell us how much money they would have left out of the $150 investment. So they would have $111.75 left. So they would have lost that $38.25 of their principal, their initial investment capital. So they didn't get any returns on their investment. All right. So we did that formula. Let's go over to analyze. So they are in the communication services sector. The ticker is CHTR. We did get the company name and I have them on the screen. So let me take me off the screen. I'm reading right here from the company profile. Here is their website, and the link for the website is also down in the description for your convenience. Let's read some of the details about this company. Charter Communications Incorporated operates as a broadband connectivity company in the United States. The company offers subscription-based internet, mobile, video, and voice services. That's as much as I'm going to read, guys. So let's go ahead and go over to their website. We can take this disclaimer off the screen and we can put me back on the screen. There we go. And we can zoom in on their website. There we are with the 150%. Okay, we already know what they do, but we can also see that right here on the website. Let me scroll up. Seamless connectivity. So they talk about the Wi-Fi, Spectrum Mobile, Fast Secure. So this is the name they have for it. So they offer 5G. What is this? Wi-Fi, seamless connectivity. So they have devices. I see their logo or their name on these. Charter Communications, Spectrum Customer Commitment, Empowering Unlimited Opportunity, expanding broadband access. Okay. Evolving ways to watch, investing in our employees. All right. So company about Charter. Let's go right there. Connecting people to what matters most. I hate the fact they don't put mission statement, vision, purpose. They don't even put it on there anymore. They just throw the information up there. Some companies put it and some companies don't. I wish all of them did it so it'd be easier. You got to read everything when they don't do that. So they talk about the number of internet customers they have, the video customers, mobile lines, and their voice customers. They give you the actual figures right there. Their impact across America. They talk about the number of employees they have, the miles of network infrastructure. They measured it. So the homes and Spectrum networks. Okay, community impact. This guy looked like a heavy set too short. I know that wasn't right, but he do. Investor relations, Charter. That's the, okay. So they have the stock information right here, investors resources. So if I click right here, it's going to take us to a whole nother website. We were looking at the about Charter and they have all of that right there. Also, here's investors home. So we can see here's stock information, careers. So job, let's look at the careers job search. I clicked on careers, nothing happens. Click on job search. Okay. And then we're going to come back and we're going to look at the other stuff. No, I don't want no cookies. They put cookies on every website now, man. It'd be everywhere. Sales opportunities, customer service opportunities, technicians. Okay, so they're telling you the different departments that you can apply for a job for. I want to know what the benefits are. Okay, I have a lot of patents. Each year over patent Each year, over patent applications are filed. I skipped the number. That's why it didn't make sense. Each year, over 100 patent applications are filed. I'm like, that don't make sense. You skipping over the big number. All right. Stock information. Here go another pop-up. Did I see anything about benefits? I didn't see anything about benefits. Remember, the links for the websites are down in the description for your convenience. If you see something that you want to look at, because if I missed it or you just see something else that interests you, you can go on here yourself. About us, opportunities. Okay, let me look at opportunities. Call center. Okay, so they talking about the different departments from right there. So let's just go ahead and go to investors relations. Can you drop this? I don't need to see that no more. All right. Investors home. Got it. Zoom in. And I'm thinking if we drop right here on the investors, we can find the stock information. Yes. So here we go. Stock information. Here's the stock quote. Here's the stock chart that they offer on the website. Let's scroll down. And here are some more tools that they have available on their website. Let me see if they said anything about dividends. Do they pay dividends? I'm not sure. We'll check it when we look over at the Thinkorswim chart. So let's go over there right now. Thinkorswim. Here we are. We still had them pulled up. Let me put the disclaimer on the screen. There's the disclaimer. So let's go over to the charts. Market Watch. No, charts. Ooh, oh my gosh. These big red candles to the bottom. Ooh, they're so painful. I don't see any dividend emblems on the screen, so I do not on the chart. So I don't believe they pay dividends. We would see green logos down at the bottom of the screen if they did. Let me pull up another company so I can show you what I'm talking about. I believe this company pays dividends, AES. Okay, so here's a different company, and you see these $ logos. This is telling you that the company pays dividends. So if you zoom in, they'll spread out a little bit. So on this date, they already announced what that dividend will be. So on May 1st, this company is going to pay a dividend of 17 cents. So let's go back to Charter. That was CHTR. So we don't see that logo, so this company doesn't pay dividends. We are looking at a 1-year daily chart, and the stock has gapped down since yesterday. I'm going to zoom in and show you what I'm talking about. It gapped down. So it closed here at the body of this candle. Let me put on the floating data box, make it easier for you to see it. The close of this red candle, this one right here, yesterday on Thursday, the close was $241.78, but the low was $241.41. That's where we're going to put this price level. We're going to put it at the low. So it was $241.41. You see how I locked on it? So that's the low of Thursday. And now we're going to put a level at the high of today. So when I mouse over today's candle, the high was $234.71. And you can see that the price level that I just put on the chart is showing the same thing. So when I take this floating data box off, this space between those two candles is the gap. So it gapped down. So the stock actually opened right here at the body of this candle. And during this trading session today, it came up and it hit that area of the 234.71. That was where its high was. So if we were to go back, we can put this here. It seems like this area, I'm looking right here. So I'm going to show you what area I'm looking at. This area was like a support and resistance zone. So when we talked about when it's above it, it's support, and when it's below it, it's resistance. Notice how when the price was above it, it was riding that zone. It was right on top of it with these 4 candles right here. And then this candle closed below it. And once that candle closed below it, it had a hard time getting back above that area of support because now it's become resistance. And it wasn't able to get through it, so it started trading and trending down. So remember that regression tool I used earlier? I'm going to show you again. See how the price is trading in that channel? I'm going to start putting these on the screen so you can see what I'm seeing. I'm seeing that the price is trending down. All right. Now, I don't want to junk up this this chart and have a whole bunch of stuff on here that don't need to be here. So you saw it. Now it started trading or trending sideways. When I'm looking at this area right here, here and here, it seems like the price was trending in between those two lines now. So now the trending is sideways, and then it went up and then it gapped down. And I mean, it dropped through all of those areas of support. So I'm going to remove this drawing and remove this drawing. And I'm going to put the support that I see. So I'm going to say this area, we're going to go back further. So I'm going to say this area right here. And this is going to be wide. I know it's going to be wide, but that's what I'm seeing. This was the support and resistance zone, because you can see how many wicks tested in this area. You see how many candles and the wicks tested the top, but it didn't hold at the top. And then these traded within it. That's what I'm seeing in my technical analysis. And then when it gapped down, it just went through everything. It even went lower than this area over here. So if I was to draw a support and resistance, a support over here, this would have been the previous support. And that it closed below that today. So this is a new 52-week low, that $178 today. And today, this company also had earnings. Yes, they did. So notice, remember, earnings, higher volume, usually. So these companies we've been looking at, besides, well, we only looked at two. Well, we know the first one had earnings because that's the company we highlight. But the biggest loser, they had earnings today as well, and they definitely had higher volume, which we're going to discuss in a minute. Their 52-week high was $437.06. So they came down over $200, almost $250 something to come all the way down here to this low. That's wild. Okay. So now we're going to zoom in. We're going to do the stock quote for Charter. And then we're going to talk about the volume in the middle of that. So cut on the floating data box. Okay. So ticker Charter. Charter Communications, they opened at $233. They had a high of $234.71. They had a low of $178, and they closed the day at $180.13, which was a trading range of $56.71. And when we look at the volume, they traded 13.3 million shares of this stock today. Now, that may not seem like a high number if we compared it to the average volume of the ETF, which is the SPY. Their average was like 72 or 77 million, something like that. This one, we haven't checked their average yet. So let's go check their average. Now, when we look at the average trading volume for this company, and yes, this is a company, not an ETF. Their average trading volume is about 2 million. 1.8 million shares is what they usually trade in a day. And today they did 13 million shares. So that's extremely high compared to what they usually get. And then on Thursday, it was only 3.6 million shares traded in that session. And then today they did basically 10 million more than yesterday. So these two trading days, Thursday and Friday today, was higher than their average. Now, when we look at the volume rank percentile, it was 100%, which means no day out of the most recent 252 trading days for this stock had higher trading volume than today. Not one. So this is the highest day of volume out of the most recent 252 trading days. Did you see the move and see it? Oh, you on YouTube. Okay, you just popped up. I just got your chat. Give me 1 second. I'm going to pull you up on the screen. I'm going to pull you up. NASCAR all out. Matter of fact, I'll pull you up right now. Let's go. Did you see the move in CHSN? It was one of the most unique price actions I've ever seen. I don't know what that is. And just because we got time tonight, I'll go ahead and pull that company up. So you said CHSN. Oh gosh, they don't trade for much. Is this a pink slip? Because they trade for less than $1. They on the NASDAQ. Let me go to analyze to get the name of the company. Consumer staples, they don't even have the name of the company here. What's the name of the company? Or what is this? Because it doesn't even tell me what it is. I would have to go to Yahoo Finance to pull up that information. Let me go back to CHTR Charter. No, but I didn't catch it. I don't even know what that company is. Let me pull back up this right quick. But thanks for the comment. Appreciate the comment. Appreciate the comment. You just text again. Chance International Holding. All right, well, I'm going to look into that after the live stream. I'm going to look into that. That is a crazy move, though. Not just what I'm seeing, like that big red candle at the end, but the fact that the stock just been in a steady decline since they IPO'd. I don't know if that's when they IPO'd, but when I look at the chart, they were valued at one point $70 a share. And now to be trading at 16 cents, that's terrible. But really, if you look at the intraday chart, it dropped 80% only to go green, then continue to drop like 95%. So when you say intraday chart, I know what so you mean inside the day chart. So were you using minutes? Were you using, were you using half hour? Were you using 5 minutes? What was the intraday number you were using? Were you using a minute, 2 minute, 3 minute, 5, 15? I done got lost where I was. Did I give yeah, I covered everything about this. So let's go ahead and move on to the biggest winner of today. So let's go to Market Watch and we can take Charter off the screen. And we can look at the biggest winner for today. So the biggest winner for today is Intel. So if you've been following the streams, 1 minute or 5 minute chart. Okay, I'm gonna pull that message up on the screen in 1 minute. I want to get this going and then I'm going to chat with you in 1 second. We covered Intel yesterday because they had earnings yesterday. So remember I said I had a treat for you guys about something I wanted to cover, which was how a company can drop on earnings. And I told you that just because the stock dropped didn't mean that the earnings was good or bad. It just meant the stock dropped. But people want a story. So they like, why did it drop? Then you give them a story. If the story is negative, whatever that negative story is, this justifies the price drop. So we're about to see something when we look at the charts with this. But they received a 23% gain today. And we're going to look at the charts and see what happened yesterday on earnings with this chart. But let's talk about this. So the previous close yesterday, or the close yesterday, not the previous close yesterday, because that would be Wednesday. Yesterday's close was $66.78. Today they closed at $82.54. So the percentage change, we already talked about it, 23.6%. So let's pull up the calculator. If somebody invested $1,000 at that previous close, and I'm gonna go ahead and put the decimal in. So it'll be 0.236. They would have gained $236. That would have been their ROI on top of their principal. So if we add the $1,000 back to it, their $1,000 would have grown to $1,236. Okay, let me pull NASCAR's chat up on the screen. So he said, he or she, I don't know if they were using an intraday chart of a minute or 5 minute. And this is something else I talked about on the other live stream. You need to know what the time frames are. So if somebody says intraday, all that tells me or anybody they tell that to, that they use the time frame that was inside a day. And you can set that to almost anything. You can set it to a 2 minute, a 3 minute, a 5 minute. So just ask and then they'll let you know, which they did. So I appreciate it. 1 minute or 5 minute. So I'm gonna look at that after the live stream. I'm gonna pull it up. I want to cover this Intel stuff for the viewers. So let's go here. So let's go to Intel. So they're the biggest winner for today. Let's go over to the charts. And this is not Intel. So let's go back over to analyze. No. Wait a minute. And then we did look at their website. We go to the website. We go over to analyze. I'm all over the place, guys. Select this. I'm so anxious to go over to the charts. I skipped it. So we already looked at Intel. The name of the company is Intel Corporation. I have them on the screen. We're going to read the description like we always do. So let me take me off the screen and read that. Here's their website. The link to the website is in the description for your convenience. Intel Corporation designs, develops, manufactures, markets, sales, and services, computing and related end products and services in the United States, Ireland, Israel, and internationally. All right, let's go over to Intel's website. Pull them up. I already have them up. Put me back on the screen. And here we go. I'm scrolling down. We're just going to browse over their website really quick because we just covered them yesterday. So if you want to go through and look at this in a slower and at a slower pace, check out yesterday's live stream because I'm gonna browse through this because I'm anxious to get to the charts real quick. And we only got like 10 minutes if I want to finish this at the hour mark. So we go to company overview. And this is real clear. Our purpose. Notice how they have it front and center compared to the other websites we'll be looking at. So I'm gonna scroll over this page real quick. So Intel makes processors. I've bought plenty of Intel processors over the years, but they are in the information technology sector. Is that what it said on the Thinkorswim chart? Let me pull it up real quick. Yes, information technologies right here. So let's go back to this website. All right, our purpose, life in Intel, more about Intel. Let's click that. So we just scroll down to the bottom of the page. All right, so let's go to careers. It's right here. Remember, links to the website are down in the description. Take your time. You can go slower than when I'm going. I just want to go through this fast. They have videos on here. I don't remember if we found the benefits that they offer for this company yesterday. I really don't. I think it was the Tesla website. When we covered Tesla, man, their website was putting me through the flux. All right, so that's the careers. All right, let's go over to investor. Nope, here it is, investors. All right, so here's the stock information right here. When I mouse over it, we cannot click that. Scroll down. That's financial results. Stock info right here. Here's the quote. Here's the charts. They've had, and they do pay dividends. So we'll look at that when we go to the Thinkorswim charts as well. So let's go to quote. Here's the quote information. Here's the chart that actually came up first. I'm impressed with all the ThinkScripts you have set up. What are some of the most useful scripts you use for your trading? I'm gonna pull that up with you 1 second and I'll cover it and let people see what the question was. And thank you for the compliment, man. I spent months designing those scripts because they didn't have anything that gave me what I actually wanted to see. So I took the time to actually figure out how to write those ThinkScript codes and write them and program them to look at what I need to see on the chart. So I'll share some of that with you in 1 second. So here is the stock information with Intel that they offer on their website, stock quote, and the stock chart. All right, let's go over to Thinkorswim. Pull that up, put the disclaimer up. All right, now go over to the charts. Ooh, man, look how they gapped up. Okay. So they didn't actually go down yesterday, but they barely moved yesterday. So let's talk about that. So they had earnings yesterday on the 23rd, and that was aftermarket. Yeah, it was aftermarket. So that was 5 p.m. Eastern time. So that explains the gap up. So today was a reaction of the earnings that came out yesterday. Now, remember, it doesn't mean the earnings were good or bad, even though the earnings were good. So the price definitely gapped up. So here's a doji. And is that an all-time high? Let's go to the weekly chart. Yeah. So this is a 10-year weekly chart, and it's up there, guys. Sky's the limit. There's no technicals that I can see in the last 10 years that's above it. So that's where we are with that. And let me pull up NASCAR's comment. Say, I'm impressed with all the ThinkScripts you have set up. What are some of the most useful scripts you use for your trading? For me, one of the most useful things I look at, or what I needed, was for the volume. So what was throwing me off when I first started trading was that the YouTubers that were explaining trading and things like that, they spend a lot of time talking about patterns. So like, I'm sure you done heard all of them, like the dark cloud cover, the inverted hammer, the rising star, like all of these different names for these patterns, and the hold, the close above the high of the low day, all of those different things like that. But what I didn't know was that what we discussed earlier, patterns can show up on any doggone chart. So if we change what I'm looking at now to an intraday, right? Like what we just talked about before, you said I trade on an intraday chart. So here's the intraday. This is a 1 minute. That pattern, or whatever pattern that they talk about or discuss, can show up on a minute chart. It can show up on a 5 minute chart. What just happened? Let me zoom in. So it can show up on a 1 minute chart. It can show up on a 3 minute, 2 minute. So what's a pattern if it can show up on any chart? Because it's just a formation. So what I found out is that patterns are more likely to play out on higher time frames because you have more volume in larger time frames. You have extremely low volume in 1 minute. You'll see a pattern, but the pattern doesn't have any volume behind it. And that was one of the biggest things that was throwing me off when I first started trading, because the people on YouTube that I was watching that was talking about trading, they never really factored in volume. They were only talking about patterns and gapping up, and here's a doji and it gapped here, and they'll actually block the time. I don't know if you're paying attention or how many videos you've seen with that, but when you watch other people's YouTube videos, check to see if they're showing you the time frame. So like on my live stream, you can clearly see that this is a 1 year daily chart if you know how to read charts. So once I learned how to read charts, I started noticing they weren't showing you the time frames they were looking at. Now, I don't know if they're not revealing that because they sell courses and they want you to pay for it before they reveal that to you, or they don't know what they're doing. I can't tell the difference. So out of the thing that helped me the most with trading is looking at higher time frames. I don't like looking at intradays. I make my trading decisions based off of higher time frames because the patterns hold more weight. There's more volume behind it. The moves, from my personal experience. So I designed this label to help me see volume better. So I give you, I don't know how much of this you're going to understand because I don't know your experience, and I have a hard time trying to explain it like this volume rank percentile, but I'll give you an example. Let's say that a stock goes up like car. Remember, so I'm not sure if you've seen that one. Let's go to car. So car went up crazy, right? So car was trading. Where's the price? Wait a second. Floating data box. The floating data box. So let's just say right here, what's that? So car was trading at $218.22, right? Let's just use these two numbers hypothetically. Well, not hypothetically because they're real numbers. Let me pull the calculator up so I can show you what I mean. If we used, this stock went parabolic. They call this parabolic because it just ran up like crazy. They said it was a short squeeze. So if this was a short squeeze that caused this to run up, and I hope you still here because I'm answering this question long-winded. When this short squeeze happened where it ran up, if we were to use the average with this rare price, like it's not up here often, this ran up crazy to $847. So now if you take 218 and then you add it to 847, I see your comment, give me 1 second, to 847, and then you divide it by 2, the average number is going to be crazy. So now the average is 532.50. Let me just put a number there, 532.50. So if I do that, edit 532.50, Bam, bam, 50. 50. 532.50. So what this means, if I was using a volume tool that used the highest point and the lowest point to create an average, almost everything trading after this parabolic move is going to show me that the volume was below average. I hope that makes sense. It's going to show me everything is pretty much under the average volume now because of how crazy high this parabolic move is. So that's why this volume label that I use is very powerful, because it filters out the noise. It narrows, it tells you exactly how many days had higher volume or lower volume than that day you're looking at, versus trying to create an average out of the highest point and the lowest point. And I'm gonna pull your comment up on the screen. And I done got lost from what I was looking at. We was looking at Intel. We on the biggest loser of the day, and I'm over here on car, and I got Intel up on the screen. Wait a minute, I'm all over the place. I appreciate the question, man. I don't get a chance to talk to people to even understand what I'm talking about often. So I hope that I was able to explain that clearly. And I should have took Intel off the screen, but here we are. We back in Intel. It gapped up. So it opened above the zone. They gave earnings after the market closed yesterday. Whatever happened with the earnings, people reacted to it. The stock gapped up after hours or pre-market, and it ended up trading up here in this no man's land that it haven't been at ever. I believe this is all-time highs. And did they stop paying dividends? It looked like they stopped paying dividends. You see how the dividends don't show up? Let me pull this over. You see the dividends here? And then when we scroll over to the right, they went away. Like they don't pay dividends no more. So I don't see any technicals because of how high it is right now. There's no historical data for me to draw the technicals. Let me pull your comment. You got a long comment. I don't know how much of it is going to take up on the screen. So what I'm going to do, please stay here, and I'm going to pull your comment up when I wrap this up, because I'm about to wrap this up now. And I'm looking at a weekly chart. So let's go to the 1 year daily chart, zoom in. Let's go ahead and do the stock quote. I'm already over 12. So let's go ahead and take care of this, and I'm going to chat with you. So Intel opened at $82.20. They had a high of $85.22, which was a new 52-week high. They had a low of $79.62. They closed the day at $82.54, which was a trading range of $5.60. And their volume was 281 million shares of Intel was traded today. Now let's look at the volume that we was talking about, right? So what do they trade on average? Their average trading volume is 102 million shares in a trading session. And they almost did 3 times that. They did 281 million shares traded today. And on Thursday, they did 155 million, which was still above average. So the volume is steadily increasing. Now, when we go over to the volume rank percentile tool that I was sharing, out of the most recent 252 trading days, only 5 days had higher volume than today. DA is days above, DB is days below. So that's what I'm looking at there for the volume. Okay, so we covered everything with that. There's no more technicals. Let's go ahead and go back to the main. And there's my Facebook. I need some followers over there, guys, so I can start live streaming over there on that official page. And I want to pull NASCAR's chat up. Now, this is long chat. Let me see if it does. It puts the whole thing up there. So let's go ahead and discuss this. I haven't read your chat yet, so let me go ahead and read it. I trade specifically small cap stocks. They are highly manipulated to what gurus are trading. It can be frustrating that the moves are so highly reactive to big gurus trading them. Okay. So I'm going to try to share with you my experience from, I know what you mean by small caps, but I'm noticing through my experience when I trade that lower price stocks, I don't know what price you're talking about, but let's say the one you were talking about earlier, like 16 cents. Those are highly attractive, not just the gurus, but people who try to trade based on price. So people that feel like they can't afford, or traders that feel like they can't afford an $85 stock. Like when we looked at Intel, Intel was trading at $70. So there's people that be like, that's too expensive, I'm not going to trade it. I'd rather trade a company that's only trading for $5. That's going to be attractive to people that don't know what they're doing. So it's not just gurus that's trading those prices, that stocks that's at those attractive prices. It's what they call weak hands. It's amateurs. It's retail traders. It's people that don't know what they're doing. So since they don't know what they're doing, they're more likely to end up on the wrong side of the trade. So in my experience, I found that shares that are priced a little bit higher than what the average person would be attracted to going to, like a $10, $8, $5, $3, or dollar stock because they feel like they can afford it, it's going to be harder to manipulate, or is less likely to be manipulated. And trust me, from my opinion, just my opinion, don't say trust me, my opinion, all this stuff is being manipulated, but it's a lot easier, I think, in my personal opinion, to manipulate cheaper price stocks like pump and dumps and things like that, because the share price is so low. It's cheap. So yeah, that's how I feel about the more affordable stock price. And that's why I focus more personally on understanding percentages, because now some brokerages allow you to buy fractional shares. So it doesn't matter that the stock is $85. If they allow you to buy a fraction of the stock, then you just buy $10 worth of it. So if you buy $10 worth of that stock, you're going to benefit from the percentage move. So like what we talked about before, what did we just looked at? So Intel had went up 32% from yesterday, right? So if somebody had bought $20 worth of Intel, their investment would have been $20. And then you would multiply one. One would be the amount of money the person invested. That's why I'm putting the 1 there. Then the percentage. So 0.23. You see the 23.6 up there? So now when I hit equal, it's going to show me the $20 plus the growth, or plus the gain. So that's $24.72. Now somebody might think, well, that ain't no money. That's only $4.72. Well, it's only that because that was all the person invested. So if the person invested $2,000, and then we use that again, 1.236. Now they made 400. They had a gain of $472 versus just a gain of $4.72. So it's relative based off the amount of money that the person is investing. Now let me see what your other comment is, and then I'm gonna get ready to wrap it up. I use ThinkScript that lists how many. I can read this out loud. I don't know why I'm whispering. Give me a second. I use a ThinkScript that lists how many times a ticker has run 100% intraday. For larger stocks, it probably wouldn't be very useful, but you could look at tickers that have gone up maybe 10 or 5%. Okay. So based on what you're saying, and because you look at intraday charts, do you consider yourself a day trader? And this is delayed, so it's going to take a minute for your comment to come through, or for you to even see that I asked you that question. So I'm not just going to sit here waiting on the answer. I'm going to talk a little bit. So if people watching, they're like, man, why he just sitting there? Because the stream is delayed. I don't want to assume. So that's why I'm asking. Because if you're looking at intraday moves, that's within that day, which we discussed earlier. So do you consider yourself a day trader? Yes, mainly. Okay. See? And then like even the conversation you and I are having now, I trade mostly pre-market small caps. Ooh, man. Ooh. Okay. Okay. Me? Oh man, they used to kill me. That used to kill me. That used to kill me, man. That used to kill me. That used to kill me. If you having success at it, man, power to you. More power to you. I salute you. But me, that used to kill me. So it killed me so bad, I made up my own term. I'm a probability trader. I don't consider myself a day trader, a swing trader, or an investor. I made up a term. I'm a probability trader. So what I do, I look at, and I wouldn't even say trader. I look at the probability of an opportunity playing out in my favor. So when it comes to day trading, isn't it like 98% of day traders fail? So if I'm just focusing on the probability, the odds are not in my favor to be successful as a day trader, just based on how many people fail at day trading. So I started filtering out different opportunities that I would see in the market and what was presented to me, because I spent $11,000 on trading courses. I paid for one that taught me, or supposedly taught me, how to day trade. And then I spent $5,000 on another trading course that was supposed to teach me about options. They were really basic courses, and you wouldn't realize how basic it was or whatever it was till after you paid that price tag. You couldn't know what was in it until after you bought it. But I learned more by reading books and taking the courses that's built into these trading platforms and things like that, and learning from trial and error and making adjustments and paper trading and making sure that I didn't use too much capital to where I would lose so much that I wouldn't be able to stay in the game until I figured it out. Did it happen to be a course taught by? Okay, so here's the thing. I'm specifically not giving names. I don't want to put myself in a bind with pointing people out. I don't want to do that. I can tell you this though. The course was $6,000. The company ended up getting sued, and it was a class action lawsuit, and I was rewarded some of the payout. So compared to the $6,000 I spent on the course, I only got like 60 something dollars back from the class action suit. I'm trying to pull your comment up. I see it. You said understandable. Yeah. So that's why I'm being vague. It's not that I don't want to be transparent. I just don't want to get in trouble for throwing anybody under the bus, man. So that was that. So the other course, and I'm gonna chat with you as long as I can, because I usually wrap up at 12, but this is cool. I'm enjoying this conversation. Let me put my Facebook stuff back on the screen. But I do have an interview that I'm doing with my sister. So she's a up and coming content creator, and we're going to do a live stream on Sunday at 7 p.m. Eastern time, where I'm talking more about my backstory and what got me into trading and why I share trading on YouTube and live streaming and trying to help people out as much as I can and being transparent. But most of it has been from my horror stories of trial and error of what I've went through. Because it's a lot. Like, once I really let me start here. If you don't know anything about trading and then you pay somebody else or you look for somebody else to teach you how to trade, you have to know enough to know they don't know nothing. That's the part that's crazy. You have to know enough to know that they don't know what they're talking about. That's the crazy part. So you have to be educated just enough to be able to tell if somebody else don't know what they're talking about. So I didn't already paid for the course. Then I started reading books and I'm using the course, stuff not working. The person is explaining stuff, but it still don't make sense. And then you looking at time, and then they talking about reading tape, and then you start doing research on tape. And then what we have now, that where we're in our era, tape reading is almost impossible, in my opinion, because you have The trading is sped up so fast. Like, this is not the 1940s no more with the ticker tape that comes out. That was slow pace. So tape reading made sense then. But now you have algorithmic trading and AI and all of these. It's coming through too fast. And then I started finding out that the tape could be manipulated. So they call them ghost orders. They could put stuff in the order in the tape where it looked like you got a big order. So the person that's day trading is assuming that they're going to hit a block there or a floor because they see this large order that they don't think is going to be able to get through. But then somebody will cancel that order. Yeah. So you just, yeah. So that's another thing that makes the odds not in my favor, because you're telling me to read the tape, but then even if I read the tape, it could be fake orders in it. So that's why I'm like, nah, this doesn't make sense to me. This ain't helping me. This ain't helping me. And then it's fast. And then you got real money on the line. So then they'll tell you, well, day trade. I mean, not day trade. They'll tell you to paper trade. So like paper trade. Here's the thing with paper trading. Paper trading teaches you the mechanics. Paper trading does not teach you how to manage your emotions. Paper trading teaches you the mechanics, like how to put the order in, how to position size, how to get in and how to get out. Then the other downside about paper trading is that your order will get filled if the price is reached. But in the real world, there has to be enough liquidity there at that price. So if you have a large order at that price and it's not enough liquidity there, you might get a partial fill. In paper trading, you won't get a partial fill. You get a full fill because it's a game. It's paper trading. So they're just looking at, oh, that price point was reached. Here's your full order. So that's another thing that's not preparing you for the real world of investing. And the more I started learning what was real and what wasn't real and what did work and what didn't work, I'm like, this doesn't make sense. This doesn't put the odds in my favor. And this makes it even more impossible to be successful trading or investing this way. Then pre-market. So you talked about the pre-market thing. Pre-market usually has lower volume. And then these companies, day traders are usually looking at companies that they have no idea how this company makes money. Let me see what you said. Can I quickly go over an intraday trade I took today and how you would have managed the trade? I bought 400 shares of ENVB at 450 at 9 prior to the halt up. Oh gosh, I totally goofed it up. I can't, I can't do that. One, that would be real difficult for me to do because I don't know what your gender is or whatever, but I don't day trade anymore. It killed me psychologically, and the probability of it, I'm personally against it. That's why I said if it's working for you, salute to you. I never personally figured it out. I personally have not had success consistently with day trading. I realized that the odds were too stacked against me for me to see success. And then when you're focused on a smaller time frame, you only have a small window of opportunity. So I want to share this with you. When you're jumping in and jumping out of a trade just purely because other people are buying it, because that's what day traders usually do. They use a scanner, right? So they're using a scanner and they're looking for movers. They're looking for market movers, and they're looking for movers in the pre-market. So this is not even a regular trading session. So like usually in pre-market and after hours markets, usually there's lower volume, right? Usually. So it's risky trading something that's usually dead. It's usually no activity on this in particular stock unless there's crazy momentum and activity because it's popping up on a scanner and all these day traders are coming in on that day, right? So then let's say an amateur jumps in, or somebody that doesn't risk manage well. Let me just not say an amateur. Let's say somebody jumps in and doesn't risk manage well. If this person jumps in and doesn't risk manage well, they might allow a trade that goes bad to turn into an investment. Okay, so what this means is they start holding this trade longer because they're waiting for it to come back up for them to break even and get out with where they got in at. But the problem is this company rarely gets traded. It's only getting volume and liquidity and movement that day, just that day. And this person then got trapped. You mentioned the halt. I know what the halts are. So it was moving so fast that they halted the stock. But this stock usually doesn't trade. So now the person gets trapped at an unfavorable position and they hold it, hoping that it can get back out, at least break even or better. But the stock never ends up getting, possibly it never ends up seeing that amount of activity or volume again. So when it happened to me, what I discovered was this company is trash. The company itself is trash. Usually the company is trash. So if you knew that the company was trash, or if I knew a company was trash, I would never invest in it with a clear head. I would never invest in it because I know it's trash. So investing was never the initial goal. Investing was the backup plan because the trade went against me. And then I realized that my biggest problem was that I was being bamboozled by people that was selling me dreams that day trading is possible. And it is possible, but the chances are very, very slim. It's like, can you hit a half court shot? Yeah, it's possible. But it's the chances of hitting a half court shot are lower than hitting a layup. it's just probability. It's probability. And then the other thing is psychology. So I want to help you. So I'm gonna pull up the monitor because I don't want to get up while I'm going to go get this book. Okay. I'm gonna pull up the chart so you can just watch the chart while I go get this book. All right, I'm back. So here are the books that help me psychologically with trading. All right. Trading the Zone by Mark Douglas and A Disciplined Trader by Mark Douglas. Both of these books help me get my mind right. It's a lot of psychology that goes behind you having a clear head when it comes to trading. And these two books helped me tremendously. But even though they helped me, I didn't realize that my actual strategies in the market and how I was going about what I was doing in the market sucked. But that was because I was sold a dream by the courses that I had purchased and all the glitz and the glamour that I had seen on the YouTube videos for trading on the internet. So like even now with like my channel, I'm not flashing money and all of that other stuff. I'm not talking about me winning trades and things like that. So when people see my content, they might browse and just see and be like, oh, he ain't making no money. He don't know what he talking about because he don't have no subscribers. Here's what I learned. If somebody has like 1 million subscribers, yes, it could be because they know what they're talking about. But this also means that this person is making money through YouTube for sure. Or they're making money through content creation for sure. So maybe some of the stuff you see them doing when it comes to them trading and investing is them putting their YouTube money in the stock market. It's not them actually making money in the stock market. I'm not monetized on YouTube yet. So you at least know I ain't making my money from YouTube. I don't even have enough viewers on Facebook. That's why I was saying I have to get viewers on Facebook. I got 3 YouTube channels. None of them are monetized. And I'm trying to save people from the horrors and trials and tribulations that I went through being bamboozled by gurus on YouTube that sell dreams. I don't sell dreams. I'm going to tell you the truth. I think that's risky. I can or I can't tell you this. This is what I do. This is what I'm looking at. This is what happened to me. I'm going to be as transparent as possible. I want to be a help to people. I don't want to try to sell them anything unless I know it's going to actually help them. So like, I believe more in, so I like, which I haven't seen people do. I would rather somebody do mentorship or coach me one-on-one than sell me a course. So you have people that's selling courses, but you can't get access to them. Or I've seen some Discords, but then the Discords be busy. You'll see everybody in there but the person that sold the course. From my experience, I never saw the person that actually designed the course in the Discord. It was everybody who purchased the course or a few other faces that was associated with the course and some random people that they had give out buy and sell signals. And then what I learned from that, if you following somebody else telling you what to buy and what to sell, that's actually financial advice. You're not supposed to do that unless you're licensed. And the average person doesn't even know that. So that's one. The other thing is, if you don't know why you're buying, outside of the fact that somebody else just told you to buy, or you don't know why you're selling outside of the fact that somebody just told you to sell, you didn't do the homework to believe in the trade. So the trade might go against you before it goes right, or it might go right. Like it's so much more beneficial, in my opinion, to educate ourselves. Like if you learn how to make your own decisions, even if it's hiring the right person to help you, like a financial advisor, somebody that's licensed to be able to help you invest your money because they're licensed. That's what they do. I'm a financial educator. There's a huge difference. I can't tell you what to do with your money. I can show you how to use the platforms. I can share with you my story of what happened to me, but I can't tell you how to actually, I can't tell you what to buy. I can't do that for you. I'm not licensed to do that. And I don't know your financial situation. Like everybody that watched the video could have a different financial situation. So I'm about to get wrapped up because I've been talking and you haven't said anything else. I see that I got a few people in the chat. Please like the content. If you have any questions, I'm here. I'm already answering. So you can just hit the chat, drop a question, and I'll answer it. Because I got time and I'm here. Otherwise, I'm about to get ready to wrap it up. I'm gonna give you a couple seconds because I know it's delayed and you might need to talk. So let me go ahead and start reading this off. So before I let you go, I want to let you guys know I have an official page on Facebook, and I would much appreciate it if you give it a follow. I need 100 followers so I can start live streaming on that page. It would help me out a lot. Also, I have an interview with my childhood friend and up-and-coming content creator, Tierra Owens, this Sunday, April 26th at 7 p.m. Eastern Time. So make sure you tune in. All the market recap live streams are scheduled and posted on the channel so you can get notified. I just gotta, oh yeah, man, you're very welcome. Thank you for the comments. Thank you for the comments. Like, I'm more than willing to talk. So I hope that it helped. Thank you. And you're very welcome. So I hope, where was I at? Because I'm reading my prompter. I'll be getting distracted so easily. Oh, hold on. You already know. I hope that you learned something, and I hope that you earned something. Thank you guys for joining me tonight. And if you haven't done so already, make sure you check out the whole life insurance link I have down in the description. And make sure you tune in weekdays following the market trading session at 11 p.m. Eastern Time. Take care and God bless.